There's nothing like being in a startup. It's the best feeling in the world.
You shouldn't give up hope. It hasn't dried up. There's actually more money available today than there was in prior years.
The key thing for us is, can you clearly state what you're doing, why it's important, and why is it different?
Hello and welcome to UCSD Connect's annual Technology Financial Forum. My name is Dave Down. I'm the managing partner of KPMG LLP in San Diego. As lead sponsor of this year's Technology Forum, KPMG continues its commitment to the technology arena. This forum is renowned for showcasing this region's top entrepreneurial talent. Starting a business is tough. Building it is even tougher. To drive growth, young companies must optimize their effectiveness in key areas such as financing, alliances, strategic transactions, business risks, and general operations. At KPMG, we believe it's critical to identify the future needs and issues organizations will have as they progress through each stage of their life cycle. The journey from seed capital through product development to rapid growth and finally maturity or liquidity event can be challenging. More importantly, it can also be exciting and rewarding. To that end, we've created this tool for forum presenters. We hope their shared experiences will help strengthen your forum presentation. You'll hear from venture capitalists, entrepreneurs, and other technology-focused professionals. On behalf of KPMG, I'd like to congratulate all of the entrepreneurs on their accomplishments to date and wish them success with this year's Financial Forum and beyond.
I think if you look at the statistics, there is more capital today still ready to be invested than there was, say, in 1996 or 97.
I mean, this is a great time to invest. We've been very, very active investing. I think we will have invested in 15, 16 or so companies, new companies this year.
The discipline that is going into investment decisions has much more rigor today than certainly what we saw 2, 3, 4 years ago.
There are the up cycles and the down cycles. This particular one is more severe, because the height of the cycle was higher and the bottom of the cycle is lower. But at the end of the day, there is still a lot of venture capital out there, and there are still, money will always find good opportunities.
We're back to basics. We're back to venture capital of the early 90s, 80s, and early 90s, which meant we're here to build a company. It's the gestation period before the company actually goes public or the company has some sort of material M&A event or whatever, is 3 to 6 years, 3 to 7 years. It takes time, and in that time, you're building a company. You're building you're not creating a transaction. You're not just flipping something. Remember a couple of years ago, flip it. I'm going to flip it. I'm going to do this. I'm going to flip it. Well, you don't do that. That's not. We're here to build sustainable companies.
The investment community in general is looking for higher quality, selected investments where they can recover their returns.
It's been a down market. It's been a really tough market, but I actually think things are starting to turn around, and we see companies much more optimistic about going out there into the market, looking for dollars.
The best time to invest for venture capitalists is when everything is down. So it's a good time for us to invest.
I think the environment is really healthy right now. They're looking at good deals, and there is money, and there are VCs that will fund.
I think this is a fantastic time to be out with a new idea looking for money. Venture capitalists, we're really planting seeds for the next 3 to 5 to 7 years. You want to get that done now. If you've made smart decisions, it'll pay off in the future.
What we do not invest in is we don't invest in R. We invest in D. So the product's got to be working. The product's got to be developable. We don't want a research project. That's